Hello, my name is Jim Quinn. I'm the Director of Financial Institution Partnerships at Upgrade. I think the challenge for banks today is the consumer behavior has changed. In previous years, if the consumer wanted a loan, they would go into the institution, they'd meet with the loan officer, they would review the financial information that would be required for them to submit a loan request to a loan committee. Then they wait for a loan committee, they wait till it gets approved, and then they hear if they've got their loan approved or not and when they'll get their money. Historically, that consumer has waited an average of 2 to 4 weeks for that answer. Many times they want that answer sooner, especially with today's options that are available to them. When you work with our platform, for example, at Upgrade, our consumer applies for a loan. They can actually be approved within 15 minutes, and then they can actually get their money in 24 to 48 hours. So that consumer experience is dramatically different than what they've traditionally been able to experience with their brick and mortars at banks or credit unions. The technology piece for a consumer today has to be frictionless. It has to be easy to use. It has to be convenient. It has to be when they want to do it. Like, for example, in our platform, we get about 2 million applications a month for our loans. Now, 86% of those applications take place before 9 a.m. or after 5 p.m. local time, which means that the consumer is applying for this loan primarily when the brick and mortar doors of the bank or credit union are not open. So that is the challenge for the bank, is to have that type of frictionless experience for the consumer. Today, even for most banks and credit unions, the application is really not very seamless. There's an online informational paper that they can fill out, but that's really the extent of what goes on in terms of their online application. That goes into the shop where a person handles it, looks at it, makes a decision on it, brings it to the committee, and goes through all the other things we just talked about. It doesn't change the consumer experience. They might be able to submit the information electronically on the front end, but it doesn't give them that soup to nuts consumer experience the way that platforms today provide. Compliance is job number one. If you sell loans to a bank, or you're a bank or a credit union itself, if you're not compliant, you're not going to do much business. At Upgrade, we sort of built the house, so to speak, on compliance. That was job number one, and make sure everything is buttoned up from a compliance perspective. And that means really knowing the regulatory reviews of these type of partnerships and consumer lending in general. I think that today, the banks don't really have a lot of experience in that online front-to-end experience from a compliance perspective. They're really learning what it takes to be able to do that. That's why partnering with firms like Upgrade can really teach institutions a lot about what it takes to create that frictionless experience for the consumer, but also has all the compliance process buttoned up. From a consumer lending perspective, the experience I believe is still going to be primarily online in terms of the preference by the consumer. Now, the bank or the credit union would like to have them come in and establish that relationship where they can cross-sell additional products and services, and they still can do that. But the consumer today wants to have this experience where they would like to have it, which means online, not when the bank or credit union is open, a quick, efficient way to do it. So if the banks are going to compete in the space for that consumer experience, they're going to have to heavily invest in that frictionless online consumer experience that most banks today currently don't have. A lot of our banks and credit unions use us for a variety of reasons. Get spread on loans, since we provide high net maturity, short duration assets, so that's attractive to them. The ability to deliver volume in a regular manner. Their loan officers and their branches don't always deliver on time. They can miss a month, they can miss a quarter. When you work with a fintech partner that has a proven track record of delivering volume, you can count on that in terms of your budget forecasting on a regular basis. I think that for banks to really learn a lot from fintechs, they can incorporate what they're learning into their consumer lending organically. A lot of our banks will look at our credit algorithm, they'll look at our process, they'll look at how we move the consumer through our funnel, and they'll be taking that information and then working on their own individual organic application process with the experience they've learned from us in the fintech partnership.